and we'll get started straight away. So let us have a look at the fundamentals, what's happened in the coming week, perhaps try and answer some questions, why certain movements happened, and what we may expect this particular week that is coming right now. Now, as most of you would have noticed last week, the main event was more or less the FOMC minutes, or the announcement after the two-day conference, in which it sparked off a massive movement. In fact, it was the biggest single-day movement for the Euro USD in the last 3 years. I think it was around about in percentages, it was 3%. Very, very close to 350 odd pips. We'll have a look at that in a moment. Now, when I spoke with you last week, I talked about the anticipation of what might be happening, and I said pretty clearly that if the Fed Reserve or Miss Yellen gives any indication that an interest rate increase will be delayed more than brought forward, if she gave any kind of that indication, we will see an immediate reaction, and the euro should bounce back very fast, and it will be very, very spectacular. And that's in fact what actually happened. So basically what they came out and said, they virtually moved the goalpost, if you can imagine it that way, and they more or less indicated that an interest rate decision to increase will not really be coming into play possibly till September or even further later in the year. So immediately what happened was all the people that were very dollar bulls, or very strong of opinion on the dollar, they immediately started to cash out and take their profits while it was on the table. Everybody else started to jump out. A lot of money had already started to pour in to short positions for Euro USD, for example, and basically everybody bailed out and it moved in the other direction. Now, we spoke about that last week, and one of the main reasons was that pretty much the data that had been coming out in terms from the US was fairly negative, to be honest, other than one piece of data, which was payroll numbers. And so finally it all caught up. The Fed Reserve made, in my opinion, a correct decision in delaying interest rate increase, purely because the data, other than jobs, was not warranting for their economy to increase rates sooner rather than later. So the net effect was they pretty much said that, and we got everybody jumped off the dollar just as quickly as that they had jumped on it. Okay, so that's my attempt at an explanation. That's what actually happened. I hope you understand what I've basically tried to describe for you. It was a very significant event, and sometimes when we trade our technicals, if you're in strong positions and you're in anticipation of such a big decision, sometimes it doesn't hurt to take your profit. Okay, and that's what we spoke about last week. Now, this week, it's rather a very, very quiet week relative to what happened last week. If I've read already headlines all over on the weekend, this is the calm after the storm. The focus has pretty much shifted back to economic data. So what I mean by that is, last week it was all about a policy, what kind of a policy we may be incorporating. This week I believe it's more about the actual raw data that's going to be coming out. A couple of key things that I see that could move the market a little bit will be, as you know, that the quantitative easing program for the euro has begun, and we get our first opportunity to see a little bit of euro data tomorrow evening. So if these numbers look good, even though it's not a net effect result from the QE program just yet, but if these numbers look good, it kind of gives the confidence that the QE program is heading in the right direction, and we could see a recovery of the euro heading towards that 110 level. All right. Now, should these numbers be bad, well then it can continue the slide on the euro. All right, we do have some US data. US data is again pretty important this week. In fact, any data that comes out this week is going to be more important than anything else because it's a data driven week, so keep an eye on that. I think that the currency to keep an eye on this week, especially because of the large movements last week, and we're getting the first bit of data release starting the QE program for the euro, and the first bit of data after the bombshell that the that Yellen put out last week. It will give an indication to see how people are situated. I'm still of the opinion that it's pro-dollar. Having said that, though, I'm not as confident about it today as I was last week, mainly because I was thinking that we were going to get a rate rise in, say, June, July time. All right, and I would be happy to hold on to some really, really strong positions, particularly against a yen, like a US yen. Now it's kind of like, well, I'm not so sure if I want to hold on to them from this far out from the finish line, if you can see what I'm trying to say. Okay, so I think the currency for the week, the one that's going to be most data affected, is going to be the Euro USD for the reasons that I've just said. If you do have a fundamental question or a technical question, you can always email me, all right? And as well, bring your questions along on a Monday, type them in, and I will address them for you. All right. So I think the Euro USD is the currency for this particular week. Let's bring out our charts. Let's see what's been happening, what we might be able to fit in, and see how we can all pan out. Alright, so let us start with the Aussie dollar. Now, the Aussie dollar, as you can see, there's that huge candle which was caused by the result of the FOMC, and it was immediately backed by a red candle, so it's very volatile at the moment. To be quite honest, on the Aussie dollar right now, we had broken out of this congested zone, and then we shot right back up. I'm kind of curious to see what's going to happen in this area over here. I don't want to go long Aussie dollar. I don't want to go short right at this position either. I had 3 inside candles that I was keeping an eye on. Here they are. Alright, but just in the last 20-30 minutes we've broken out to the high side. I'm not prepared to trade that. So for the Aussie dollar this week, and what you'll see when I show you, when I go through my charts, there's really not much showing on our 4-hour and daily charts. The only thing I can look at is see what happens. Let's see what happens when we get to this area. And let me just check one other thing. I just want to draw a fib line from here to down there. Look, if we get towards the 80 level up here, I've got a fib, a 127. It's fairly close to a full decade number. If I can see some kind of price action set up at this level, at the 80 level, then I'm interested in looking for selling opportunities. All right, we're not there right now, but please draw a line on your charts around about the 80 zone and look for price action. You all know how to do it, so look for some price action candle setups and see if we can find one. If I see one, I will send it out. But that is the key level. Let me have a quick look on a 4-hour chart if I have anything different. I think this is going to continue to go up. I'm not sure if that line's going to hold, but this is a little bit interesting. Let me get rid of this so we can clean up the chart a little bit. And let me get rid of those parallel lines which are no longer valid for us. Looks a little bit better there. What you may have to do is you may have to adjust this top line. So this top line is not solid yet. Well, actually, this point here is locked in. That's a locked in point there. Okay, if this candle breaks like that, I still don't want to trade that, alright? For some reason, I don't like it. I don't want to trade it. What I would rather is if I was going to try and trade this triangle, I'd rather maybe look for it here to go up or here to go down, alright? But that's on that's a daily chart. Let's see if it looks a bit neater on a 4-hour. Okay. Let's just keep the lines on our chart. Let's keep these lines on our chart, but let's use them. Let me get rid of the top one. I don't want to trade it as a triangle. What I'm going to use it as is I'm going to see what happens. I'm still very interested in that 80 zone, which is up there somewhere. Okay, so what I'm interested in is to see if I get some kind of price action back down, and if it does this, and then when it comes back here, then I might look for a bounce back in the other direction. Alright, so I'm just setting this up. We're still a little bit far away from that, but those are the two things that interest me the most on this chart. I just don't really like that as a triangle down there. Now, unless it holds, if that holds and it starts to come back down and you get a little bit of price action set up there, well then you might be able to get a cheeky trade in there off your 4-hour chart. Is that clear for everybody? Do we understand what I'm trying to explain? It's a little bit of intuition. Apologies for that, but what I'm trying to say is if this level now holds like this candle right here, and I get another candle here like this, the fractal pops up there and I get it there, then yes, I like that trade. Alright, this is a 4-hour chart, so the triangle I will trade it off a 4-hour chart if and only if the current candle holds. I get an inside candle straight afterwards, that'll pop the fractal, and then I'll do the break-in trade down. We all clear on that one? If that scenario pans out, this trade will be ready at the end of the next candle, which is whatever I have on this one plus 4 hours, so about 6 hours time. Alright? Okay, that's the Aussie dollar. Let me move on. Let's have a look at the euro. The euro's got a setup. The only thing that I don't like about it, well, we talked about the euro last week, was let's see what happens if we come back to this area. We kind of did, but we didn't get any single opportunity to trade it, so nothing really happened. We've got an inside candle. We've got 3 of them in a row. Actually, there's 4 of them. That one's also inside. But I don't really want to trade this. This distance is too big. So I don't really have an interest in trading this one. There's a better setup on the euro yen. We'll take that one. I'll show you that one. The euro yen is much nicer and cleaner. So this one here, we'll leave it alone. Okay. There might be a nice triangle here. Give me one moment. On a 4-hour chart, I can see it already there. Oh, it's not as clean as I thought it would be. No. This week, like I said, this week the charts are not showing me as many things as I would like to see. And at the moment, I've got nothing for you on that Euro USD. There are 3 inside candles, but it's not a nice setup, so let's leave it. Now, the data that's going to come out, pretty much most people feel that the Euro USD now is range bound between 105 and 110. So let me draw that out. Pretty much that's in here. So what we could see, let me bring it down a little bit, what we could see is a bit of consolidation. Data is going to move it around, but the euro is not in a very, very good state, where until this QE program starts to come in and take more effect, it's really, really not in a good state. The US has gone off the boil now because of what I spoke about at the start of the session. So we could be ranging on the Euro USD within this area here. All right. So if you wanted to, I guess you can look for setups on the fringes, up and down, and see if we can get some. We're too close to the middle. This setup is too central, so I don't like it. I'll leave this one alone, but I'll just leave that box there, see what happens next week. It's more than likely bound to that particular range. Okay? Let's have a look at the GBP USD. Okay, the GBP USD, we busted through down. It went for a really wild ride. That candle it's a 500 pip candle, this one here. So in one day. So the GBP was very, very volatile against the USD last week. It's left us with a horrible looking chart, and really, to be honest, I needed to settle down before I could even consider any type of trade at all. Let me have a quick look at a 4-hour. The only thing that is happening is it's displaying divergence from up there to down here. We are going down, and my indicator is going kind of up, so which would indicate a movement in that direction. However, it's already made significant movements in that direction, so I think for this particular week, it's one that we need to leave alone. What I do see, let me just get some of these things out of the way. What I do see is that we have made a higher high and a lower low. So if this was my range there, we went up and made a higher high, and then we made a lower low. So what I'm going to start to look for now, and this is on a daily chart, so we could get a really nice setup out of this. I'm going to start to, oops, that wasn't very well drawn. I'm going to start to look for some kind of a pattern there, and then if it comes good and the GBP finally makes its recovery, we could get that big shoot in that direction there. However, it doesn't matter which way we get it, as long as we do get a movement that is observable. That's the only real thing that I can see, but it would mean that there's a long time before that happens. So it would be, that looks weeks away, to be honest. So at this stage, just keep an eye on it. I'm just going to draw on it so that I don't forget. So that's where I think we may be, but we're probably a little bit away from that at this particular stage. All right, there's nothing really, nothing at all, to be honest. This is the most horrible of all the charts, and it's been caused by that 500 pip candle, and then the very 2 days afterwards, which have been very, very, very volatile. All right, so when this happens, sometimes you just got to just change charts, have a look at something else, and you'll be able to spot something nicer. All right, let's have a look at gold. Gold. Oh, we've come out of the channel. I didn't see that. Let me have a look. We've come out of the channel before that. Where were we last week? 1, 2, 3, 4. We didn't get a chance to trade off that bottom. It didn't set up for us. I'll show you this one here. We didn't get a trade there. We would have been stopped out, but it didn't set up. But now, that's a clean break. Alright, so now what I'm going to do is I'm going to start to look for longs. But let me see if I can see it a bit better on a 4-hour chart. Okay, what we can look for, let's draw a little line across that top there. And let's look for, if this comes down anywhere in this area here, and let's look for an inside candle setup to propel us into that direction. Alright, so there's a few newer faces in the room today that I can see. So what I'm looking for, to be precise, is this. I'll try and draw it. Let's say that I get a candle, a red candle that looks something like this. Let's give it a little wick. And then I get another one kind of lower like that. And then I get a blue candle, something like that. What that will do is it will leave me with a fractal down here. And then there's an inside bar right there. And at that level, when we break that level there, we want to trade it in that direction. If that sequence happens anywhere in between that area that I've just described, that is a setup that we're looking for, and I've dropped down one time zone to a H4 chart to see if I can spot it when it's happening. Alright, so this may well and truly form overnight, or maybe depends how much it moves in New York. That's the conservative entry, alright? That's for you waiting for a pullback and a confirmation of price action. If you're a little bit more aggressive and you want to go for it, you're ready to go for it right now, straight out of your daily chart, alright? So you would basically just jump it right now, alright? And that would be the setup for you. But since we've been practicing our price action, I would suggest wait for the 4-hour pullback, see if you can get it, and then the probability of the trade is a little bit higher. Does that make sense for everybody? And that's gold. Yep, we're all clear? Good. This bottom level over here, it didn't quite get to that double bottom that we were looking for. It bounced off a little bit early. Alright, so, and if I'm going to measure, let me just see how much room I have to breathe. So if I was to draw Fibonacci lines there, so now I'm in two minds, guys. Give me 1 second. Okay, the reason I'm in two minds is because I've actually looked at two different types of trading. I've looked at one as a counter trend. The trade I just described is a counter trend trade, but if you're a trend trader, you're actually hoping that these two candles give you the setup to come back down, but we have come out of the channel. So, alright, we'll stick to what I said. We'll keep it as I said, 4 hour. We're looking for that trade to go to pull back into this area, give us a setup and bounce it. Okay, that's the trade that we'll stick by that because we've come out of the channel. All right, so I find the channel's a bit stronger. We've popped out. That's the trade we're going to look for. All right, so that's gold for us for this week. Just make sure you look at a 4 hour chart. Just mark it out just like I did. And on your 4 hour chart, you should see the pullback in and a bounce out. All right. Let me move on. As you can see, the charts aren't really showing me much today. US yen, I found a really nice, this is a good one. US yen on a daily chart. I've got a nice channel. Okay. It's ready to trade right now. We're just looking for a setup. It's what I would like to see is I'd like to see a 2 candle formation here, so that gives me the kick into that direction. Alright, so everybody knows what we're looking for. We're looking for a set of inside candles on the border to give me the opportunity to trade upwards, alright, to bounce off that. It's a daily channel. Let's see what it looks like on a 4 hour. See if we can maybe trade it off the 4 hour instead, because the setups may be a little bit different. Okay, if you want to do it off the 4 hour, what we're looking for is this current candle to not close underneath this line. Okay, so we don't want it to close underneath. It's okay if it leaves a wick on the underside. We're happy. We've got 1 hour to go on this candle, and then what I would like to see is the very next candle to be contained by that one. That'll give me the fractal, and then on the break, that's the trade, and it's off a 4 hour chart. We will know if that trade is valid in 5 hours time. Okay, so I've got 1 hour to go on the current candle, and then I would have 4 hours on the next candle. So that'll be 9 p.m. my local time. So wherever you are, at 9 p.m., have a look at this chart on a 4 hour time frame, and you could possibly have a trade set up ready to go. Alright, so that's what we're looking for. If you want to trade it off the daily chart, well then off the daily chart, you may not get the setup until you've got to wait for today's candle to finish and tomorrow's candle. So off a daily chart, the setup may be there on Wednesday. Alright, so depending which way you want to do it. The 4 hour looks valid. We're actually trading the same channel. The only difference is on a 4 hour, we're just grasping a tighter entry. That's all. Okay, so that's the US yen. That one looks actually pretty good. So what I'm just putting a note to myself to look at my chart at 9 p.m. If it's valid, I'll send out a message this evening. Okay, USD JPY 4 hour, 9 p.m. Okay, I just wrote that down. So if I see it, I will call it out at 9 p.m. when it happens. Alright, the Euro Yen. This is the setup that I like the best for this week. Off a daily candle. Very, very clear. We are in a downtrend. We've consolidated a little bit. We broke down. And what I'm looking for is this movement to continue. We've got a nice setup. We have 3, 4 inside candles on each other. So I'll call out the trade right now. This one's valid. What we're trying to do is, I'll draw a line so that we can highlight it. I want to sell at the break of that white line that I just drew on my chart. Okay? If, however, we break that top line that I've just drawn on my chart, the trade is null and you should cancel out your order. So the entry would be, the low here is 128.69, 128.69. Probably you can get an entry at 128.66. Okay, so let me place it. It's a sell stop. 128.66. Now my stop will have to be the top here. So it's a fairly large stop, so you're going to have to size your trade accordingly. Okay, it's 300, so your stop's going to be 128, 29, 30, 30, 131. I think 75. And my target will go 1 for 1. Although if we break that, we'll go 1 for 1. So make it 126, 25, 25, 66. Okay, you can see the trade. Okay, so what we're trying to do is, if this candle breaks through there, we're going to jump on to sell, and we hope it comes down to our target over here, and there is our stop loss above there. Alright, one thing to note, if today's candle, if this current candle that we're looking at, let me zoom in a little bit more so we can all see it a bit better. So if this current candle doesn't break the top and doesn't break the bottom, alright, so let's pretend it finished exactly like it is right now, then what we would need to do tomorrow is move your entry to these levels over here. So this would be your entry, and this would be the level at which you cancel out the order if it touches, because then you would be basically trading 1, 2, 3, 3 inside candles. Does that make sense for everybody? Stephen's asked me a question about, is the 4 hour more aggressive? I think you're referring to when I was looking at the US yen. The 4 hour would be a little bit more aggressive, Stephen. However, we're still technically trading the same channel. So in terms of risk, I just get the feeling that the 4 hour will get you into the trade. The daily may not get you into the trade. Alright, so yes, we'll have to say it's a little bit more aggressive. Lois is asking, unsure on how to size the risk on the JPY. So I get US yen Is that what you're asking me, Lois? I'll just backtrack for that. Alright, so is everybody clear on the on this euro yen trade right now, that we have to wait for this candle to finish? If this current candle does not break this bottom or this high, tomorrow you will have to delete that order and re-enter a brand new order to the limits of this candle. Alright? Okay, let me try and answer that question, Lois. I don't understand the risk on the JPY. Okay, can you just let me know? Oh, the conversion. Okay, use the mini terminal, Lois. Alright, and then just type in the number, the pips, how many pips to enter for your stop. Alright, so for example, this particular trade is 305 pips, so just put in 3 as your stop. Instead of typing in the actual level, put in 305, put in the dollar amount that you want to risk, and the mini terminal will work out the risk for you automatically. Okay, fantastic. Alright, so this order is in for me, so I'll leave it, and I'll have to check tomorrow morning at the start of the new candle whether I have to cancel it or do something. Don't forget, if it breaks upwards, cancel it out straight away. Next, let's have a look at the Kiwi dollar. Now, I don't know what happened with the Kiwi dollar just now, because it just moved like 75 odd pips in like 2 seconds flat. I was eyeing out a double top trade. You can see here I'm on a daily, so we had double bottom, and we were here, and I was thinking like we might get some kind of a setup to come back down, and all of a sudden it's just jumped right through it. There was no data, nothing. All I can think of is there must have been a heavy build-up of stops, and it's just shot through low volumes and just cleaned everything up, and it's just shot straight up. So that's left me without a trade for us. So let me have a quick look what I can see right now. Alan is saying that to risk $50, the size is 0.01. That's for that yen. Thanks, Alan. Alright, so let me have a quick look for our chart. What have I got? Actually, that looks like two good sets of ABCD patterns back to back. That looks like this, lightning on a 4-hour chart. Let me just check that. I haven't seen that pattern for ages. Let me just have a quick double check. My eye just says yes. Okay, the first one is good. There's a 61.8. Okay, so that point is locked. It's good. Let me check the second one. Wow, that point is good. Okay, does everybody see that? That was a valid ABCD. I haven't done this pattern for a while. That's A, B, C, D. And then you would normally trade that down off there. Does everybody see? It's an ABCD pattern because this level, it was a Fibonacci retracement of the AB, and this level is the Fibonacci extension of the BC. Alright, if this doesn't make too much sense, you'll have to go back and review one of the classes that I did on pattern trading so that you can see it, but it's an ABCD. Now what I'm curious about is I get the feeling that we're going to hit it. It's almost another one. Let me just double check. If it is, this pattern is extremely rare. It's like 2 ABCDs. Yes, that's good as well. So what I've done now is I'm turning this into my A, my B, and there's my C. So that's a tick. And the last one I've got to check. I'm starting to get excited here. Is this one here. Oh, look at that. Two ABCDs. If you want it, it's already pulled back 20 pips, but I'm going to chuck a pending order. So, sorry, in my excitement, I haven't really explained it properly. I'll try now. Here we go. What I found is this was an A, B, C, D pattern, and sometimes you get two of them back to back, where now this is also A, B, C, and D, and they're all in perfect fib retracements. Alright, so the way that you would trade that, well, you would have already had one trade, one winning trade, and the current one right now, your entry level would have been at 76.53ish. Now it's already pulled back. It's on a 4-hour chart. I'm just going to put in a pending order at 76.45. If this creeps up 10 pips, I want to. It hasn't pulled back far enough. Okay, so I think the trade is. It may give me an opportunity to enter, re-enter again. All right, so I'm going to place this, and where am I going to place my stop? Let me have a quick look at a daily. Okay. I'm going to give it 40 pips. All right. Karen saying she can see the pattern but not sure which leg to trade. You always trade the D leg. The D, Karen, the D leg, and this is the D leg right now. We've just missed it, but I'm going to put in a pending order to sell at 76.45. Here I go. 76.45, and I'm going to give it a 40-point stop, so 76.90 is my stop, and it should come down to, I'll use Fibonacci to give me a target, 75.50 is my target. Okay, let me just place it and I'll talk about it. Alright, there's the trade. So what I'm hoping, because I've missed it, I'm hoping it creeps back up. Let me change colours. I'm hoping it creeps back up, gets me into the trade there, and then comes down to my target profit, my TP level there, which I've chosen my 38.2 retracement. And if I'm wrong, there's my stop. So I'm risking 40 pips. I'm risking to make 90. So I'm trading at about 2 to 1, a little bit better than 2 to 1. Lois is asking me, could I wait for price action for this trade? You could, Lois. However, an ABCD type trade, if you wait for price action, by the time you get it, it's already pulled back and you've missed a trade. Alright, so with this one, it's one that I'm not wanting to go the price action way. I just want to be honest, I really wanted to be in this trade already. But I'm just going to jump in late, but I don't want to pay the current price. By the way, if anybody wants to get in at 76.31 and make sure that you're in, well then you can jump in right now. And your risk ratio is not 2 to 1, it'll be about 1.7 or something like that. But what I'm trying to do is just jump in unemotionally with a pending order. Alright? Does that answer your question, Lois? So that's Kiwi dollar. Let me see on the 1 hour on a daily chart if I saw anything else. No, nothing else. Alright, so I'm happy with that. I've placed the order. I'll live by it. Last one for today, Euro Aussie. Let me have a quick look. I sent out a signal for this Euro Aussie. Now, first of all, that channel broke, all right. So we weren't interested. What we were trying to do is we were trying to trade a 4-hour channel bounce. Now I've just dropped down to a 4-hour. Let me zoom in a little bit. Last week we were in here somewhere, and unfortunately we didn't get a setup, so we didn't have an opportunity to trade that. When we got to the other side, we didn't get a setup to trade down either, so we got protected from the breakout. All right. So the channel did its job. It helped us. Unfortunately, we didn't get a trade, but it also stopped us from jumping in on one. Now, let me jump across to my daily. Let me get rid of the channel. I sent out a signal on these two candle setups over there. Who got triggered into the trade? Can I just get a show of hands? Alan got triggered. Anybody else? Okay. Greg, Stephen, Romy, all triggered. Guys, we forgot one thing though. Technically, you should have cancelled your trade out. Alright? Now, does anybody know why? In reality is we shouldn't have got triggered into this trade. Does anybody know why? Lois cancelled her trade because it went higher. Fantastic. So Lois, top of the class today. Yes, see this little bit right there? It broke the high. All right. So in theory, you should, when that happens, you've got to cancel the trade out. So if you're in this trade right now, all I'm saying is you're in this trade, but incorrectly for the reasons that we spoke about. If you want to continue with it, fantastic. And if you want to close it, fantastic. All right. I don't want to influence anything. All I'm trying to say is the correct setup would have been if we did not break that top. All right. And if we didn't break that top, you should have got an entry over here, even at a better entry price, because you would have had to use the third inside candle for the entry. So I suspect that most of you got in at this level down there, the lower one. All right. So is that correct? So for the ones that got in on the trade, you got in at the lower level? Yep. Okay, so that's pretty much everybody. So what you need to do when you put in these pending orders, when you put this pending order into the market, get into the habit of putting an alarm at the other side, at the side that you're not interested in. If your computer sends you the message, makes the bell that the alarm's gone off, then you go to your computer. If you have already been triggered in the trade, well then that's okay. Just wear it out. But if you haven't, you should be cancelling the order out. Okay? And also, if you don't get triggered on that day, you've got to look at 9 o'clock the very next day, because you might get an opportunity to get in at a cheaper price, like in this example right here. All right, well, I'm not going to, so for that, there's quite a few of you in this trade, so hopefully you can get something out of it. Let me see what I can see now. To be honest, it still looks good short. Okay, I can't see anything else on this one, believe it or not. Okay, no, that's it. That's all I got on the Euro Aussie. The only thing that I can see coming, but we're a little bit far away, is this. I'll show you. I can see this coming. I don't know why my brain sees it, but this is what I can see. Keep an eye on it. I see this, and then a trade up to that level. It's probably a week away, but that's what I can see. Alright, other than that, I'll leave those markings just to see if it does pan out or not. If it doesn't pan out, we don't lose nothing, so it doesn't hurt us. Other than that, any questions? Any questions on anything today before we call it a day? Well, I'll recap. Let me have a quick look. Aussie, we have 30 odd minutes on this candle and 4 hours on the next to see if you get an opportunity to get a setup and bounce in there. That's the Aussie dollar. Other than that, there's nothing on it. Euro USD, we said we're going to leave it alone. GBP USD, again, leave it alone. We're just noticing the start of a converging triangle on a daily. Gold, we are waiting for some kind of a pullback on a 4-hour time frame. We're waiting for a pullback into this area here. See if we can get a price action set up so that we can bounce it into that direction. US yen, we're trading a channel. We're looking for a 4-hour entry, which we will have in, again, 4.5 hours time. This candle, it's got 36 minutes to go. If it stays around about where it is, it's great. And then I've got to wait for the next one to see. Now, I just saw something, guys, on this one that sometimes we forget. If this candle finishes exactly like it is right now, and the next candle is like this, and it's bigger, you will still have an engulfing candle over here on these two. Okay, so just keep your eye on it. I just saw it right now. Alright, you will still have an engulfing candle over there, which will still give you a setup. Alright, Euro Yen. Euro Yen, we've placed orders. We just got to check tomorrow morning if we need to adjust the order and set an alarm at this top level. If no one knows how to do it, I'll show you how to do it right now. So I'll go to alerts. Alerts down the bottom, right click, create. A little box will pop up at you like this. You have to tell it what you want. So I want Euro Yen, so there it is. Then you give it a level. Let's just say 130.70. All right, I should measure the level first. So let's say when the bid is greater than 130.70. All right, and then click OK. And now notice on my chart, there's a little line that just got drawn on my chart. When that price gets to that little line, it'll make a sound, and obviously make sure that you put that line at that level there. So then if it rings, go and cancel your order out. Alright, so that's Euro Yen, Kiwi Dollar. I've placed a limit sell at, where did I place it? 76.45. I'm trying to get in on this trade. I kind of just missed it, but I still want to get in. Euro Aussie. A lot of you have a trade on the cards, but we're just going to be monitoring this little triangle that I think is going to be forming. All right, Karen's asked me the question, T-Chaser on a daily Kiwi dollar. Kiwi dollar. Let's have a quick look. Yes, the trade's already triggered though, Karen. It triggered Friday, last Wednesday. This was the trigger candle, and that's the most recent. But for those of you who trade T-Chaser, you would have been in on that trade even earlier, the 18th, which is you would have got a trigger on this candle over here, right there. Alright, so the answer is yes. Oh, sorry, daily, I'm on a 4-hour chart. Apologies. No trigger yet. You may get the trigger tomorrow, but not yet. Okay, actually, this is a good example, so don't jump it. Right now, all I can do is analyze the candle that has already completed, which is that one. I am not allowed to analyze this candle. This candle, I will analyze it tomorrow morning. Alright, so the answer is I can only analyze the candle that finished. The one that finished, I can see straight away that these moving averages are not in order. Okay, and the CCI is not at the level either. This one, that's a tick, but I got 2 crosses, so no trade. Tomorrow, I could have the setup. It just has to push on a little bit, and probably tomorrow I might get it. All good? Fantastic. Alright guys, that's pretty much it for me for today. I will see you all on Thursday, 3:30. If you do have any questions throughout the week, send me a screenshot, ask away. I'm always happy to look at them and share what I see in them. Other than that, take care, and I will see you on Thursday at 3:30. Bye for now.